Did you know that the Canadian government offers its residents an interest-free loan to buy or build property? It's been around since 1992, and hundreds of thousands of Canadians have used this program to purchase a home. Buying a home can be challenging enough, so let's talk about this resource that's available to you to help you with your real estate dreams. I'm talking about the RRSP Homebuyers Plan. It's basically an interest-free loan from your RRSP account, payable over 15 years, and is specifically intended for first-time home buyers to use when buying their first home. Before I go on any further, I'm sure some of you are thinking, what is an RRSP? So an RRSP, also known as a Registered Retirement Savings Plan, is a savings account that's registered with the Canadian federal government that you can contribute to for retirement purposes. When you contribute money to your RRSP, you can claim the deposits against your taxable income for the year. So as a general example, let's say that you made $70,000 this year, but you also contributed $10,000 to your RRSP account. You can claim that $10,000 against your income and be taxed lower at $60,000 instead. The $10,000 that you put into your RRSP account, plus any investment growth that occurs, is tax deferred until you withdraw it. Withdrawals are usually intended for retirement when you're in a lower income tax bracket. So now the home buyer plan is an exception to this rule, and it allows you to withdraw funds that are already in your RRSP account tax-free if you qualify under the home buyer's plan. So by participating in this program, you will benefit in two ways. One, from the income tax deductions you get from the contributions made to your account, and two, to use the money in the account as an interest-free loan for a down payment to purchase your first home. So that's basically the bird's eye view of the RRSP Home Buyers Plan. We're going to dive into this program a lot more in this video. And at the end of my video, I'm going to share with you my exclusive link to the comprehensive home buyer plan guide that I've created. It gives you insider tips to help you maximize the benefit of this program and gain an edge on your home buyer journey by sharing 3 powerful money-making strategies that I recommend when using the home buyers plan. So eligibility. To withdraw money from your RRSP to purchase or construct a qualifying property, you must be considered a first-time home buyer. There are 4 requirements to be considered a first-time home buyer. 1, you must be a resident of Canada upon application and up to the time the home is bought or built. In the preceding 4 years of purchasing your home, you did not occupy a home that you owned or one that your current spouse or common law partner has owned. You must have a written agreement to buy or build a qualifying home, and you must intend to use the home as your principal residence within 1 year of buying or building it. Special note on being a first-time home buyer. You may be eligible to participate in this program again if you bought a home before, as long as you fully repaid any previous home buyer plan balance by January 1st of the year in which you're planning to make the new withdrawal, and you haven't occupied a home that you've owned in the preceding 4 years, or one that your spouse or common law partner has owned, and you must meet all other qualifying criteria. Special note on disability as well. The home buyer plan criteria is slightly different if you are a person with a disability or if you're helping someone who is related to you with a disability to buy or build a qualifying home. The CRA notes that the first-time home buyer requirements do not apply if the home is being purchased for a related person with a disability. However, they do have some requirements on the property itself. So we're going to talk next about withdrawing funds. So to withdraw funds from your RRSP account for the home buyer plan program, you need to complete a T1036 form and submit that to your financial institution. Be aware, you cannot withdraw the funds and then claim it as under the home buyer plan program. You first have to complete the form and then withdraw the funds. There's also a 90-day rule when using funds in your RRSP account. All funds have to be in your account at least 90 days before the date you intend to withdraw. Additionally, you also need to use the money that you're going to withdraw within 30 days of closing and taking ownership of your home. Next up is repayment. So repayment starts the second year after the home buyer's plan withdrawal was completed. The repayment fee is 1/15 of the total amount that you withdrew. So for example, if you withdrew $30,000 in 2023, your repayment fee would be $2,000 a year starting in 2025. So technically, from the date that you withdrew the funds, you have 17 years to pay back this loan. If you're a little bit disorganized and you're not too sure how much you owe, don't worry. The CRA will send you a home buyer's plan account statement with your repayment amounts and your home buyer plan account balance with your notice of assessment. And you can also find the information online under your My CRA account. When making a repayment to your home buyer's plan, you need to report it under Schedule 7 of your T1 General Income Tax Return. Now, if there's a year that you do not make a repayment, the balance will be added to your taxable income. So for example, say you made $70,000 and your repayment due that year was $2,000 and you submit 0, your taxable income for that year would be $72,000. So they will add the repayment fee to your income. Special note too, that you are not able to get a tax deduction for any of your home buyer plan repayments. So you can't say, hey, I paid $2,000, now tax me at $68,000 instead. That's not how it works. If you're counting on some tax deductions from your RRSP contributions, you need to contribute to the RRSP plan on top of your home buyer plan repayments. Additionally, any fee repayment that you make to your home buyer's plan does not count towards your RRSP contribution limit for that year. So say you had a contribution limit of $10,000 and you repaid $2,000 on your home buyer plan, you can still contribute $10,000 to your RRSP account. Next up, frequently asked questions. Can I repay more than the minimum amount to reduce the balance faster? Yes, you can repay more than the minimum amount per year without penalty. Keep in mind that any repayment would not qualify for the RRSP contribution tax benefit. Can I make multiple withdrawals with this plan? Yes, you can make multiple withdrawals within a year as long as you do not exceed the $35,000 withdrawal limit. I just found out about this opportunity, but I already have an agreement to purchase a property. Do I still qualify? Assuming you meet the 4 eligibility requirements to be considered a first-time home buyer, a withdrawal from the plan can be done up to 30 days after your closing date. So there's that 30-day rule again. After 30 days, you are no longer eligible to make a withdrawal under the home buyer's plan. What if the purchase agreement falls apart and I decide to purchase a different property? If it's before October 1st of the year following the withdrawal date, a replacement property may be considered by the CRA. What if I'm buying my own home and the closing is delayed? It's quite common. Provide evidence to the CRA that you paid the contractors or builders for the materials after the date you withdrew the funds and before October 1st of the year following the year you withdrew those funds. Can I cancel my participation in the plan if I've already received my funds? Potentially. You must send a cancellation letter or form RC471 to the CRA no later than 60 days from December 31st of the year after the year you received the funds. Can I use the funds to purchase a second home or an investment property? No. Can I combine the home buyer's plan with my spouse or my common law partner on the same property? Absolutely. Assuming you are both considered a first-time home buyer, you can combine the plan with your partner for a total of $70,000 towards qualifying home purchases. Keep in mind, you can only take money from accounts in your name, not your spouse's. Doing so can create tax consequences, especially if one spouse has funded the other spouse's RRSP. Can I combine the plan with other home buying tools? Yes, you can combine the plan with other home buying tools, such as the new FHSA plan that came out April 1st of 2023. So you can use the $35,000 from your home buyer's plan, plus the $40,000 that's available under the FHSA for a total of $75,000 towards a qualifying home. Additionally, if your spouse or common law partner also qualifies under these programs, you can both use the $75,000 available to you, which gives you $150,000 to use as a down payment towards a qualifying home. If you're curious about the FHSA, I do have a video on it. The link is in the description, and you can learn more about that home buying tool that's available to you. I hope you've enjoyed this video that I've created on the Home Buyer Plan program. If you have any questions or comments, feel free to drop them below and I'd be happy to answer them for you, or you can reach out to me online. And as promised, if you're ready to turn your real estate dreams into reality, visit myhbpguide.ca to get your copy of my exclusive guide to help you leverage the Home Buyer Plan program to your benefit. Thanks for watching my video, and I'll catch you on the next one.